All right, guys, welcome to week 2 of the masterclass program. So we're just moving along. We're going to cover today's price action. There was a little bit of a conflicting narrative this morning for myself. I was lucky that I stayed out of certain trades and didn't chase some stuff around. I ended up catching one decent one at the end of the session. So I'm going to go over what was available today and why today was kind of like an interesting piece of price action and how you could have traded the sweep properly. All that kind of fun stuff. And we're also going to look at setting up the magic keys. What I want to do is get through all this price action first. And then at the end, if we have time, I'll go over it. And worst case scenario, if we do run out of the time, what I'll just do is record something separate so that I can give you guys a little bit of a breakdown on how to use it. But we should have more than enough time to just kind of cover today's price action. Tomorrow's masterclass is going to be getting a separate piece of price action as well as Sundays. So you guys will have 3 different lessons to kind of go through, at some point this weekend, going into early next week. And then hopefully throughout the remainder of the masterclass, I'm hoping to get at least 2 to 3 different pieces of price action per week for you guys. So no guarantees. It's obviously going to depend on what was available to trade and how it's relevant to the strategy and the trading plan. I am still in the works of just rejigging the trading plan. Just going to show you what to look for on the 4-hour. I think most of you guys already know. Basically, the trading plan that I've given you is basically how to set up your entries and stuff like that. Obviously, we can get directional bias from the higher time frame, but it's just to give you a little bit more concise, a little bit more precision, instead of like flopping around between 4-hour, 1-hour, 30-minute, all these different things. So we'll start with the 4-hour. Let me just kind of back us up to, actually, we'll start on the 15. Okay. What the hell is this? Get rid of that. Okay. So let's go to, we're in 4-hour demand way over to the left-hand side. So maybe what I'll do first is just kind of get that plotted out for us so that we can see what's going on here. Okay, so like this, go to like the daily, just to bring this over a little bit better. Cool, and then you could probably just refine this down to the wick. Okay. Typically, I don't do this. As all of you guys should know by this point, I mean, I don't use the daily. I very seldom use the 4-hour, but when we have these big pushes down that we need to be able to at least have something to go off of and kind of gauge our analysis off, we're not going to be using the 15 because it's just really not available for us to use. So at this point, we're going to be looking to play pullbacks. We just had this sweep. I'm going to just jump down to the 15 here and get our most recent piece of price action up. Got a lot of people tricked on the wrong side of the market, I'm sure, but that's okay. That's what we want to talk about and just kind of go through. So I'm going to just kind of play this back. I'll get rid of this stupid zoom. It's up at 7 o'clock, so in and around here. Okay. So I apologize in advance if I gave you guys not the wrong narrative, but a narrative that maybe didn't kind of correlate with yours this morning. And this is kind of the beauty and the beast of me doing these is, I make mistakes too, but it's how you adapt to them, right? Is ultimately what's going to, keep you in check and stuff like that. So ultimately, market came in this morning. This is what I was looking at. So what I wanted to see was that these highs were going to give out. Okay. And the problem with wanting to see that and marrying your ego and seeing this nice wick up here to kind of mitigate and all this kind of fun stuff that essentially this is where we broke structure from, that's unmitigated. The problem with this is more often than not, it's going to happen, but you're going to miss out on a lot of trades that are available from here to here, right? So let's just talk about this. So right now, the the big thing on the 15 that I saw was, it was pretty clear. I mean, we had this break of structure, right? So usually what I like to see on this break of structure right here, let me just go like this, break a structure to the upside is, okay, well, now I'm saying, well, if we broke structure like this, this had to have been, the sweep of liquidity, but this isn't a very sweepy nature. Like this doesn't really sweep in that much, right? It just kind of, trickles into here and then breaks structure to the upside. So, this is kind of, I wouldn't say forcing an analysis, but in a way, you're kind of going, okay, well, this has to be a strong low because it took this out, right? So what happened here is when we've broken through structure, okay, we've come back down, demand is in control of the market from this level. The second we saw that we couldn't break this high, I should have realized this morning, which I didn't right away, but I realized in hindsight, that the second we tapped into this demand's job is to take out this high. And if we don't take out that high, then ultimately it means that this low is going to be weak, right? And if we come down into here, right, and we break through the low, which is exactly what we did, where's the strongest point in the market right now? Anybody want to mark that up? Yeah, the high should be strong, right? So what I failed to realize, not even realize, but what I failed to accept was the fact that we have too much liquidity built up. I've been waiting for this fucking pullback for like 2 days now because I want to trade it, right? I wanted to trade it. So I'm sitting here impatiently waiting. So what do we got here? We got supply, right? And the reason we can consider this supply is because we took out, now market structure has shifted again, right? In terms of 15 minutes. So this high, or sorry, this low put in this high that broke structure. This high right here put in a low that respected the low that put us into the high in the first place, okay? And once we failed to break through and then put in a new low, obviously that gives us a POI, right? Because we had that break of structure. So now things have changed. And now what I should have seen is that we have equal lows resting across here. So what does equal lows mean? It's really simple. I mean, equal lows, especially in a POI like this is going to get ran, right? So I failed to see that, and I was looking for demand trades in here. Luckily, nothing showed criteria because I probably would have taken unnecessary L sitting here. I actually took a short when somebody kind of called it out in the thing in the excuse me, in the pre-New York narrative. And I kind of realized what was going on when somebody said, are we looking for sells now? And I was saying no, and I'm looking at it and I'm going, okay, well, yeah, ultimately, yeah, we are, because we broke structure here. So let's go. This is the only time I'm going to use the 5 minute, is to just kind of like refine down these POIs. You can see how large this thing is. So ultimately what I want to be doing now at this point is just doing something like this, right? And being able to just, kind of clean things up a bit. Like this POI is massive. You might see a couple different 1 minute bosses in here that might get confusing, but ultimately what we're looking for is something that takes liquidity and then breaks structure, right? So if that's the case, let's go something like this. And I'm just going to map out my stuff here. Okay, so demand was in the market right around this level. Okay, we respected demand. It's great. Again, this is a 5 minute demand block, but it's a good little area to see that 1 minute. Let's just see what happened over here. Yeah, so there was a great opportunity to get into this. I mean, ultimately, where was this? Yeah, right here. We had this sort of change in character right around here. Let's grab this supply. What time was this at? Yeah, this is right at the beginning of London, but we'll still talk about it. Supply was in control from here, right? So if supply fails, again, just a good example, when supply fails, what does it create? It creates demand, right? So this supply level failed from here, and away we went, right, into the high. Now, the second you start seeing that we respect these levels, well, where should you be trailing your stop, right? You should be taking partials probably up and around this region, and possibly even trailing your stop around here. If there's not enough liquidity, which there wasn't, and the reason why there wasn't enough liquidity is because all we did was push through here, and there's nothing else for equal highs, right? So there's no real reason for price to want to continue further up until we build more liquidity around the region, right? So anyways, we're getting a little bit off topic here, but I just wanted to show that. So come into here, tap into demand, that's fine. Now we've broken through essentially this point right here, which is your structure point. So now we can put on a break a structure. Okay, so break a structure to the downside. And we created a strong high. So once we got the strong high, we can start to look for potential trades, right? So am I going to put a limit on somewhere up in here? For me, probably not. I want to see confirmation. I want to see a little bit more to the puzzle to be able to get into these trades. You know, if we build liquidity like this, I'd like to see this get swept. And then I can look for something in here to kind of come down into this, right? We have all the liquidity built here to be able to sweep and take out equal lows, but just need to make sure that we're executing at the appropriate time. So, okay, let's leave this like this for now. And what I was saying this morning is that there's demand sitting in here. And I couldn't have been more wrong, to be honest with you. And it's not that there wasn't. There definitely is demand. And the reason there was demand is because the lowest point was right here, right? So we technically took out structure here, right? Creating that small changing character with a strong low here. And I was expecting to see a potential like this. So it was a valid area to look at, given that we would have seen a 1 minute change of character, and then we could have traded it, but nothing ended up showing up. So let's just play price through. Let's go to the 1 minute and start watching what's going on. So we've tapped into, you know, kind of supply very, very briefly. And now it's just a matter of, okay, well, at what point do we sort of get in here? Sorry, Hugo. Oh, you're looking at this as like a sweep kind of thing. Yeah. Oh, okay, cool. Mistake, all good. Okay, so again, don't get lost in the 1 minute, right? The only reason we're clicking on the 1 minute chart is because we're at a POI. We're at an area of interest, right? So when we start to see this, you got to start to ask yourself, you know, what needs to break for me to consider getting into something, right? So for me personally, if I was to just go out to the 5 minute, you know, I guess, you know, you don't want to be forcing anything too much, but let's say, you know, once this demand level here breaks, you know, this isn't really demand though. And the reason this isn't demand is because this is where structure sits, right? So in order for us to consider kind of getting into a trade at this point, I would need probably something like this to break. And there, I hope everybody kind of understands that. And now we have built up mitigations happening, right? So it's just about kind of reading between the lines as to what's going on here. So, you know, what happened? How did we break structure here? That's what I'm always going to be asking is how do we break this structure? So let me go like this, break a structure to the upside. So how do we break structure? Well, we broke it from somewhere down in here, right? So if that's the case, well, then let's go like this, right? We'll say, well, this demand level right here needs to fail, right? If it doesn't fail, then I can't get into a trade. On the contrary, if we end up taking out the high one more time for whatever reason, then we can start to look for something like this, right? Where we can break this now, or maybe even something up in here, depending on how the pullbacks play out. And it just might give us a little bit more reason to get in, right? But ultimately, right now, we've basically created these relatively equal highs. We ideally would like to see some sort of a sweep. Price. Okay, lots of people probably trying to get in here. It's okay, you can, but you got to be able to manage, right? So let's go like this. Supply, technically, you know, we've technically taken out this little piece of structure right here on the 1 minute. So ultimately, we have a, you know, obviously a small piece of supply, we could say. And if you wanted to take a trade from here, you could. But you just got to be careful, and you got to be able to realize that, okay, if we do tap into this, get tagged into the trade, as soon as we break structure again, just move yourself to break even, because we do have liquidity resting above, right? So let's just say we took this, okay? And this whole trade idea would be based off the fact, you know, keep this just above here, maybe 1.5 pip. You know, we could target those equal lows, right? We could target this weak low. Because we're reacting to supply, right? We're expecting to see supply kind of hold from here. So if we take out the equal lows, something just below it, let's go like this. It's okay to get into these. Like, I mean, you're better off putting yourself in a position to break even and at least get into something that could potentially run than, you know, ultimately watching this entire thing go without you. So, okay, so right here, pretty simple. I'd be moving to break even almost immediately. And the reason why is because we're just building up mitigations more and more and more. We haven't really seen a decent sweep into the block. So I'm just, yeah, just to be a little bit more precautionary, I would say my stop loss would probably be at break even. We also have this demand level down here to kind of deal with still. More than likely, we're going to produce a reaction off it because it's unmitigated, and it's going to deplete the remaining orders and create more liquidity for this higher time frame intention move here. Okay, so break even on this trade right now. Okay. Tap into demand. Okay. Now, would I trail my stop here? Probably not. There's liquidity built. There's a chance that we could sweep like this and then break down, you know, just creating enough liquidity to be able to facilitate this move. So it's just one of these things where, you know, it's not a big deal to take a break-even trade. All that's going to do once you train your head, of course, and get your psyche right, is provide a better opportunity, provided you do get taken out for break-even. We could also just break right through this, right? So play price. Okay, so we get that sweep and we start ripping. Okay. So obviously break even on that, not a big deal. Didn't take this trade, but anyways, I'm just trying to show you that it's okay to get into these mitigations, provided you know how to manage them accordingly. Just give me a sec, I'm having a sip of coffee. Okay, so we've taken out the high. So now this creates a low to be able to kind of watch. We need this low to kind of break for us to even consider getting into longs. Now, on the flip side, again, we're following around on the 1 minute, but you know, if we break structure here, which is what I was expecting to happen, if we broke structure here, I would say that these would get induced and that would create this strong low down in here. And that's kind of where my whole narrative kind of got not even twisted, but just that's where everything kind of originated from. Was I was expecting this to give out, in all fairness, and I had pretty good reason to with the amount of liquidity that rests above it and how deep in this bearish leg we were. So it was a little bit wishful. Didn't end up actually producing, but it is what it is. So now we got to adapt, right? So we tap in, we've swept, we've basically mitigated the extreme of this block over here. I'm not looking to get into anything yet. Okay, we need to see what's going to happen here. Okay, push down. There's nothing. We haven't had to break a structure. You know, seconds chart might be able to see something. You know, I'm not going to be diving into that until a couple weeks in. But ultimately, right now, in terms of the trading plan that you guys all use and have been studying, there's really no entry at this point, because there's no guarantee that we don't just blow through this thing and then come back down. Okay, so let's just keep waiting. Okay, get the tap into the wick. We essentially take out the high right here. Don't be looking for fucking longs at this point. You know what I mean? Like we're just waiting to see what's going to happen. We're still respecting supply, barely, but we are. Okay. So technically, the low to break at this point is this low. And the reason I can say that is because ultimately, if you look right here, we've had a very small break of structure, right? So I would consider this now my tradable low. So let's go like this. Now I would say that this is a sweep, liquidity sweep on the top. And the reason I can say this is a liquidity sweep is because immediately after, now we've changed character, right? So if we've changed character from here, right, liquidity sweep, here's your chalk. Okay, so there's the chalk. So now it's like, okay, well, if you guys had to put an order on right now, where would you put it? Yeah, cool. You know, you could look at the wick. You could factor in the wick as well. Personally, I don't think I would have a problem with this area right here. And the reason why is because this is kind of where it shows the imbalance. So I think this would be more than enough for me. And again, because it's on the original change of character, usually like to have about a 2 to 2.5 pip stop. So just something like this. I'm just going to peel this guy over here. And let's go oops, like this. Okay, so yeah, I'd probably give it approximately 2 pips in and around this region like this. Okay, now you could factor in, maybe, jumping this in like this, depending on how things kind of develop, obviously. So let's just keep our order on something like this. And we want to target the weak low, right? So it's really simple. You don't have to target way the fuck down here. Just target the low, put a pip past the low, because ultimately you got to remember what's likely to happen here. So let's go to the 15 and just kind of talk about this. Okay. If and when we take out this low, which is the expectation, right? This high created this low, failed to take out the high, put a new low in, respected the high, we're expecting a new low. So once this new low gets put in, okay, and we take all this liquidity, what do you think is going to happen? Well, it's probably going to take out these equal highs, right? Because if you take out equal lows, right, and you take out all of that resting liquidity all the way down, all of these sell side orders, okay, that are all sitting underneath here, underneath every low, and we come down here and then we break structure like this, what do you think is going to happen? Well, the only liquidity that's going to be left in the market is going to be sitting up here, right? So then we can start looking at potential longs. We'll get to that in a few minutes here. Okay, so set this like this, and then equal lows are down in here. Okay, so where are we at here? So 16 pips, we'll probably give it like 17 pips. Okay, something like that. Cool. So let's see how this starts to play out here. Okay, we don't get tagged in, and we start pushing away. That's fine. Okay, so right now, this is kind of a good question, I guess you could say. And the reason it's a good question is, would you now move your order or would you keep it where it is? Would you stay here? Yeah, keep it here, right? The reason you do that is because you want to induce something. You want to be able to induce something. Like ideally, what I would like to see happen here is a push like this, push into the low, push into the low, creating this to be able to sweep into where our order would get taken. Again, whether or not that's going to end up happening, but this is kind of like the ideal setup. We want to be able to see liquidity get cleared into the area that we're trading from, right? Can I ask? Yep. Go ahead. There's a demand. Good, yeah, good call. Good call. I mean, you know what? You're not wrong. You're not wrong. If we're in this demand level right here, okay, I would say yes, you should be removing your order. Okay, and the only reason why is because if we react to demand, we could very easily put in a potential for a new high. You're 100% correct. Thanks for catching that. So let's just remove this order so that we can stay aligned with the trading plan. But yes, there is a demand level here because we technically took out this structure level right here, right? This is all substructure stuff. So you got to remember, we're in a 15-minute POI right now, going against a 1-minute demand area. So more than likely, it's not going to hold. But in terms of the trading plan, in all fairness, we should not be keeping our orders now up until we kind of break this low, right? We're ultimate, like this has been mitigated, so we don't need to worry about this. But we do have this bit of demand resting in here. We'll just take all of this right here and go like this. Okay, so let's play price. So get the reaction. Okay, respect supply, right? We got a little piece of supply here. We're not looking to take trades from here, right? We're getting too deep in the leg. We want to see a pullback. Okay, so we've broken structure. That's it. There's nothing. There's nothing telling us that this is a sweep. We're not mitigating anything else. We're looking at this as a break of structure to the downside, which is going to solidify that we are essentially having a strong high at this point, because the only job that this demand level had was to be able to hold and take out the high, and we haven't been able to do that. And it's no surprise given the higher time frame narrative from the 15-minute down. So break a structure to the downside. Okay, so we've got this supply level that's left unmitigated at the extreme. So now what I'm going to do is we're just going to kind of watch how things kind of play out a little wee bit here. We respect, this area right here. Okay, so at this point, I'd probably be putting my order back on. So let's do that right now. Just want to see what this is. Again, because we have an unmitigated wick up in here too, this gets a little bit dicey. So I think with something like this, not that I want to cover the high. Let me just see what this would be around the 50%. If I took the 50%, yeah, something like this. Maybe give myself a 2 pip stop, something like this. I just want to have a little bit more wiggle room to be able to, because like technically we do have a small bit of liquidity resting like this, right? So it's just one of these things where, you know, especially on the change of character, there's going to be room for scale-ins and stuff like that potentially too. So I just want to make sure that I'm in a position where I'm not getting taken out of my first order. So I'd probably take the 50% at this point. And just give myself at least a 2, probably even a 2.5 pip stop, really, without really hesitating. We're not going to be coming back up to mitigate the extreme, but we may tap into this area up in here. I just want to be cautious of the area, that's all. So let's go like this and place this order back into the week low. So 1 to 7, that's not bad. Oops. And again, there'll be room for scale-ins because technically this is pro trend, right? We're allowed to take in stack orders. So that's probably what I would do, is something like this. Don't be scared to have that 2.5 pip stop on the original change of character. I'm sure most of you guys have been victim to it. How many times do you get swept out at your stupid block and for whatever reason, it just doesn't end up holding out? So let's just go over to the 5 and just see. You can see a little bit clearer here, right? As to like what area should be tapped into and stuff like that. on the 5 minutes. So let's just keep it like this and we'll see if we get tagged in. Okay, we've come down. This is not a change of character, and the reason it's not a change of character is really simple. We're in bearish order flow. We've respected the high. We've changed character. We've broken structure. Do not get trapped into getting into longs here. Do not force trades that are not there. We are aligned with higher time frame intention to put in a new low. Don't be chasing trades around on the 1 minute. Okay, ultimately just sit back, let your limits get tagged in, and then from there we can just watch what ends up happening. Okay, so now we have liquidity built, which is reason for price to kind of go up. Okay, creating more liquidity. Coming up, equal highs. Okay, give me a sec. Let's see. Does this sweep? And just barely. Still equal highs in my opinion. We've just to say tapped in. Okay. So here's where things get interesting, right? So now what do we do? Really, we're just kind of printing equal lows. They're very, very small breaks of structure, but they're still there, right? So we have another boss. So let's just mark this in. Break a structure to the downside. So, question, do we move our order? And if you think that we do, where would you put it? Personally, I'm not moving my order. Again, I'm kind of answering my own question here, but there's liquidity resting here, right? In order for us to really produce any kind of momentum, what do we first, after the first lesson we've had and the few talks that we've had in the pre-New York narratives, what usually needs to happen for us to be able to go in the opposing direction? If we want to just rock it this way, what do we got to do first? Should be taking liquidity, right? We should be taking the rest of the buyers out of the market so that we can then take the sellers. That's typically what I like to see. Now, sometimes it means you don't get tagged in. So what? If this thing just rocks through, don't chase it. Let it do its thing. Let it start pulling back and then take the way up, right? Everybody's so scared that if they miss out on the one trade, this trade idea that they've been waiting for what, 15, 20, 30 minutes to kind of come through, they think that they're going to have to chase around lower quality trades throughout the session. At least in my experience, I used to do it all the time. So I just want to, again, just kind of be transparent that, you know, it does happen and it's normal. So this is technically a supply area. However, I would ideally like to see these equal highs get taken out before we can consider getting into a position. Okay, so let's go like this, equal highs. And let's just watch how this ends up playing through. Okay, so think about it. We've taken all the liquidity from here, right? All of this buy side, or sorry, sell side liquidity, we've taken it, right? So now we've taken the low as well. So what's going to happen next, right? We can still stay within market structure and come into here before coming back down to the downside. Okay, mitigated supply at the wick right here, right? Failed to make a new low, creating more buy side liquidity. Okay, and here we go. We're going to start moving, right? So we come in, we've tapped through, and we start pushing away. Okay, so once we start pushing away, then it's just a matter of trying to sort out exactly when it is that we want to move over to break even, when we want to take partials. Ultimately, this will probably be a move over to break even. I'm not taking partials on like a 1 to 6. I'm probably just going to let this thing run to the week low and just position myself properly. So yeah, I mean, really, as soon as the low gives out, yeah, right around here even, you know, like there's nothing to mitigate. The only thing that's left to really mitigate in this area is going to be something like this. We can see that we've barely tapped into it, but ultimately our break even would be above this, right? So really, you have to think about where this trade would get invalidated, right? Are we going to come all the way back up to the extreme, or are we just going to follow mitigations now all the way down? Probably going to follow the mitigations is how I would see it. So in something like this, once we get that push away, we've seen now a new supply created. We've got a new supply created here. I think I'm more than comfortable putting my stop loss at break even. And if it takes me out and then ultimately brings us through like this, that just creates equal lows to then come into the extreme of the block to be able to trade long from. So just have to understand what's happening. We don't really control the price, obviously. We just have to be able to react to what it's giving us. So right now, I would say I don't really have an issue with jumping into a break-even trade. So we'll keep that at break-even right now and let this push through. Okay, so now demand has failed, right? So pretty simple. Where did demand fail from, right? You guys want to map that out? Let's just see if, let's get the low to break first. Okay, so there we go. Now we've had the break of structure. Okay, so we've had a break of structure on the 1 minute. Okay, so where do we break structure from? Yeah, up in there, exactly. So ideally, you always want to have something, you know, that we're going to induce. And it's just a fancy word for liquidity. But ideally, a lot of people are going to trade from here, right? A lot of people are going to say, okay, well, I want to trade from here because they're going to want to rush in. And what that's going to create is, okay, well, we're going to push, probably create a low, but then we're going to create this liquidity to then come up into where the imbalance kind of lies. So that's what I would look for. I would be looking for this guy right here all day long. No issues whatsoever. Okay, so if you missed your first trade, it's not a big deal. Let's do something like this. Okay, take this guy. Oops, right at the beginning. And this isn't the change of character, right? This is just a continuation. So we should just follow these mitigations. I would probably just like, yeah, 1.5 is probably more than enough for me at something like this. Shouldn't be going any higher than it, especially with the imbalance. We're probably barely going to tap into this block, in my opinion, or my experience rather. So we'll just leave something like this, and same target, you know, just below here. There's a nice 1 to 8 for a scale in. There you go, with commissions and stuff like that. So let's just leave that on and we'll see if it ends up playing out. Okay, so we tap in, we've made equal highs now, right? What do equal highs usually get? Usually get swept. Okay, there's the sweep. Start pushing down. Haven't tapped into the block yet. Okay, probably wouldn't have got tapped in maybe by spread at this point. We'll see if equal lows, still relatively equal lows. We still have liquidity built here, right? So personally, I'm still keeping my order on. Okay. There we go. And then just keep pushing. We haven't broken structure. We haven't done any of that. We've just come in, tapped in. Yes, now we've created maybe a small bit of demand where people may consider trading from. Obviously, we're not looking to do that, but ultimately you can see this little break of structure. What's that going to do? It's now going to create equal lows for us to continue going down. So we may get a small reaction here. Not really sure if it ends up doing that or not. But at this point, really with the equal highs sitting here like this, even though there's a block sitting here like this that we could potentially come into, I'm moving this over to break even. And the only reason I am is because I don't want to be exposed to us sweeping out and going back to the extreme for whatever reason, or just breaking structure to the upside. So I'm just going to move over to break even, kind of protect my capital, also protect your emotions more than anything else. Capital is not too bad if you know how to risk manage. It's the emotions that can really get the best of you in situations like this. So break even with this trade right here, I'd probably be moving this guy over to here as well. This is where I started looking for buys because we chalked after tapping into 5-minute demand. Yeah, so again, this is one of these things too where, you know, demand is not really relevant at this point because we've broken structure to the downside a few different times. We've cleared liquidity and we've also respected the 15-minute supply. So I get you, man. I was on the same boat this morning. I'm just doing this all in hindsight now, where I kind of went wrong. So yeah, definitely not looking for demand trades. Ultimately, if we just zoom out to like the 5-minute right now, you can see, yeah, we had this little demand zone in here, but ultimately what it boils down to is this demand doesn't really do anything, right? It didn't take out structure. It just put us up into these regions, right? And if we did tap into demand and you're in a supply trade, it's really simple. Just protect that capital, put your stuff at break even or trail your stop a little bit more aggressively in case we do decide to kind of fly from here. But this is not a level I'm looking to trade from now, given the fact that we've respected this high. The only way I would look to trade this would be, okay, well, if we see a 1-minute change of character, so let's just draw this demand in here because technically there's demand because we've broken substructure. But it's not going to be as powerful as the 15-minute supply at the structure high. So let's go like this, go down to the 1. Okay. I would probably refine this down to this guy. If you look over to the left, you can just kind of see like how much liquidity is built up, you know, sitting here. It's not likely that this is going to do much, especially with all the liquidity resting. And then if you look over to the side here, we've got all of this resting here. We are technically still pro trend, putting in a lower high in relation to the actual swing structure. So with all this said, it's just not really a wise decision to be trying to force trades at this point, right? We would like to see some sort of maybe a purge of liquidity come down to this side, see something like this, and then we could potentially look for a long position to take out all this. Because as we do all this, we are building liquidity for a long. It's just whether or not we're going to take all of the sell side liquidity that rests underneath all of these lows first, or if we're just going to have enough in here to be able to facilitate the move. But let's just keep playing price through at this point. So yeah, break even at this point. Technically, this was the demand level that should have been drawn in. But yeah, there's no real demand in these levels for the reason that we never ended up actually taking out structure. If we would have made a new high, something like this, then we couldn't trade this supply region up here to come down into the lows, because ultimately if we've broken structure, that creates a strong low. Okay, so let's keep moving here. Okay, so now let this kind of go through. We've now tapped into demand again, and we get a reaction. Okay, so ultimately at this point, the level that needs to break for us to get into a trade is pretty simple. It needs to be here, right? And we got equal highs. There should be more than enough liquidity for us to be able to see this happen. And if it doesn't, then we just don't chase the trade, right? So where does supply control the market from right now? Yeah, exactly. That's what I'm seeing. So if supply controls the market from here, and really this is not demand, correct? Like we can all, do we agree, yes or no? Like, is this demand? Did we break structure? No. So in all fairness, this is not a strong low, right? The only way that this could become a strong low is if we took out this supply level right here, and then we could trade from this. But this is not a strong low right now, given the circumstances, because of its lack of ability to take out the structure high. Okay, whoops. So let's go like this, get rid of this stuff. So in all fairness, if this is no longer demand, okay, and we have a supply region, sitting in and around here, could you potentially take a scale in? Well, I mean, in theory, you could, because we're not actually leaving from a demand level, right? We're leaving from an area that tried to break structure, but actually didn't, right? So let's go like this, supply. Again, I don't think I would be taking this, but I'm just saying, for argument's sake, I think this is a reasonable thing to consider. This is obviously a pretty large block here, 2.2 pip. I don't really like that. So I'd probably bump this guy into maybe the 50%. See if I get tapped in like that, 1.5 pip stop, more than enough. I don't know that you would even get tapped into this, but ultimately the moral of this entire thing is that this is available to trade based on the fact that we are not actually leaving from a demand level because it failed to take out any sort of structure point. So for argument's sake, we're going to stack this order here. Okay. I don't know if we got tagged in there or not. Barely. Lucky. Okay, let it push. Everybody's going to think there's demand here because everybody wants to see demand. Everybody wants there to be demand here. They want to pick the bottom of the trade, but ultimately all we're doing is producing more equal lows, right? Equal lows, equal lows, equal lows, equal lows, equal lows. Man, it's game over for the low. It's just not going to happen. So if you start to see us reacting to this level in and around here, for whatever reason, you can see that we're starting to wick into it, and you've taken this scaling for whatever reason, and you see that we're having a hard time breaking it. Guess what? Move your stop. Okay, just protect your capital. There's no point. Thoughts on sometimes we want to see sweep into this versus this. Sorry, do you want to just cue your mic, Hugo?
Yeah.
Hey, man.
Hey, I mean, this might be the answer might be kind of like the location, but yeah,
Okay.
no, just how sometimes we want to see price sweep into our POI, kind of like how we had this, and then I guess this, but then
Yep.
this one it's just kind of like a direct move into it.
Oh, you're talking about for this continuation here?
Yeah, this one we're not like we don't. Yeah, there's like no really sweeping.
Yeah, I got you. I mean, there's nothing to really induce. What got induced here was here, right? So like you can see, like I said, like there's this little small break of structure right here. So this is ultimately on a lower time. Let's look at this on a lower time frame. Good question. Let's go down to like the 15-second. You can see it a little bit better. So ultimately, we broke the low right here. That creates supply, right? So what do? We run this into the POI.
Yeah.
So
yeah, that's fair.
It's all relative, Mike. We're more than likely, like in order for us to move in any direction, we always have to take out the opposing direction. So you just have to correlate those time frames accordingly, right?
Right.
Cool. Make sense?
Yeah.
Thanks, bro. Okay. So go back out to the one. Okay, so yeah, we start to react to this low. We're not going to call this demand. It's not really demand. If this would have taken out this high, then this would have been a relevant area to potentially take trades from, but it's not, right? So let's see what happens. Okay, we just melt off. So that's good. At this point, supply is in control from here. We're getting really close to TP at this point. So what I would say is it's really simple, man. Protect your capital, bank some profits. And how I would do that for banking purposes, because it's a smaller TP, they're only like 1 to 6, 1 to 7, 1 to 8, whatever they are. What I would probably do is just trail stop here. Supply is in control from here. If you want to do it like half a pip just above, just like if you were taking a scale in here for whatever reason, just treat it as if it's where your stop loss would be if you were to actually take a scale in. So this is that invalidation point. So if we swept like this, broke through here, that creates potentially a small piece of demand, depending on how you look at the market. But let's just trail our stop here in case we decide to. Okay, so we tap in. Okay, so you would have been taken out potentially, depending on how aggressive you were with your stop. Let's see if this ends up so there you go, ends up taking profit. So again, you can't manage everything perfectly either. Getting close to TPs, I probably on these sells, I didn't take any of these sells. I took one in and around here, and I took a break even on it. And then I ended up taking the long down in here. So I'll show you that in a second. But with something like this, I don't think I would have an issue. If I got taken out, you get taken out. You're really close to TP. Let's say you had all 3 of these orders for whatever reason, which are all valid orders. You still would have banked probably. Let's just see what this would have been. So 2R, almost 4. So that's 6. 6 and 6. So 9R sitting right there, just like that. So let's go like this. And now, okay, so once we do this, now we got to zoom out. Okay, so just zoom out of this and have a look at what's going on. Okay, so the low has been taken, right? So here's the low, and I always like to mark out, and I didn't do it this time, but I typically will always mark out the low, so I have some sort of a reference point to just kind of understand what's going on, right? So if you look at this, and we've now taken the low, okay, let's go to the 15. Once we take the low, what's left? Usually not that much, right? So once this thing starts breaking down, excuse me, and whenever it stops, as soon as I see a 1-minute flip here, or even a 15-second flip, I'm usually able to jump into a trade. And the reason I'm able to do this is because if you think about how many stop losses, how many breakout traders, just got tagged into their trades or out of their trades, what's pushing the market in this direction now? There's really nothing, right? So if we don't keep melting off like this, and we start to see that, okay, well, the momentum's kind of died at this point, we can start considering looking at longs. So what I'm going to do for the last 15-20 minutes of this lesson is just kind of go through the process of looking for these things. So once liquidity is taken, okay, oops, go back, Command Z, there we go. Let's go down to the 1 minute and let's see what happens, if anything happens here. Okay, so immediately after, we see this huge bullish candle. So that's indicator number 1 that, okay, we've purged liquidity. And if you go to like the 5 now, you can see that, okay, we have this big wick. So usually what that means is, okay, we've taken out all the sellers, and ultimately now we're just going to start reclaiming buyers, right? So when we start reclaiming buyers, now we can start to consider, okay, well, if that's the case, how could I look for a long? So this is where, I'm going to show the 15-second. You don't have to be buying your premium or anything like that yet, but I just want to show you, this is arguably one of my favorite setups to be able to trade, because this entire thing was based off of bullish order flow, right? So we were waiting for a new high to get put in and never did. So if you look at this right now, where do you think the most liquidity sit? Like, let me just print a couple more candles here, but where do you think the liquidity is going to sit? It's probably across these highs, right? So if we look at, yeah, exactly. So where does supply control the market from above this? Bingo. Cool. And then this is a wicked area to be able to now take potential longs, depending on how this, obviously, I know how it shapes up because I took the trade, but I want to show you how to get in and why you can target these areas, because now we have levels of liquidity that would need to be taken to be able to then put in a potential new low. But the problem with this is, because we're in higher time frame demand, what this is technically going to do is, if we sweep this and then break structure, that creates a strong low to then trade and take out potential new structure highs and create a new area to trade into something like this. Okay, so that's what I'm looking for right now. And let's just go down to the 1 minute. Okay, and let's play price. Okay, so we start coming off of this little area of supply. So what I want to do now is just jump down to the 15-second. So when you get onto the 15-second, this is where things, you know, can obviously get a little noisy, but you got to know how to read it. So I want to give you guys kind of like your first lesson on how to kind of read these details. And it only applies, 15-second charts only really apply when there's a higher time frame sweep of liquidity, and we would trade in the opposing direction to have that chalk. You want to get in first. This is if you're impatient. Ultimately, if this thing blows through the roof and then comes back down, then we could trade from here. But you know, when it's getting close to the end of the session and you haven't taken a trade yet, sometimes you got to make lemonade, right? And I'm going to show you exactly how to do that. Okay, so not looking at any trades yet. We're essentially reacting to this supply level right here. So let's just see what happens. Okay, so we push down, 15-second, push up into the high, right? So we've technically taken out this little bit of demand. We've reacted to now supply right here. Chances are we're going to put in a new low. Okay, there's the new low. Okay, so what is supply's job? This supply should take out structure. Yes or no? It's pretty easy question. Obviously it should, right? That's the idea. So if we come down into this, let's go to the 30-second. Let's just have a look at this. Might be a little bit cleaner. Yeah, so you can see that we've essentially, why are my inside bars gone? Weird. Okay. Let's go like this. So we can say that technically we've had a very small break in supply right here. I don't know if you can see that, but very, very small break in supply. And the reason this is supply is because it happened before we took out structure. Okay, you can see that right here. So are you going to set limits? No, we're going to sit here and wait. We kind of want to build this narrative a little bit better. But ultimately supply failed. So now we got to say, okay, well, this could have just been a sweep. And then we could put in a potential new low. So what I want to look for is, technically we have a small bit of demand. Okay, we're not trading from it, but we're having a look at this area. And the reason why this is of interest is because there's no liquidity resting below this low right now, right? And the reason there isn't is because we just took all the stuff that rests below these equal lows over here, and really nobody's trading from this. So now we got to see the little details on the 15-second to be able to say, okay, is there anything that we can trade? So let's play through. Okay. Reacting to supply. Failed to take out the low. Failed to take out the low. Failed to take out the low. Okay. So this would be probably somewhere where I would look to get in. And the reason I would be able to do this is because you can see how many times we failed to take out the low. Now, you can get a little bit worried about the details of these equal lows here. So let's just say, like, you know, we don't need to get in because of all the equal lows. It might, you know, start to scare you a little bit on the 15-second. So let's just wait a little bit further and see if there's any other entry. But this is a valid entry right here, because essentially we're taking out these little areas and then capitalizing on this. We've built all of this liquidity like this from the higher time frame all the way down to the 1 minute to be able to essentially put in this new high. So we'll keep playing price. Okay, so here we go. So now we've put in the new high, right? We've essentially taken out this level right here. I don't know if you can see that, but this is the lowest point, right? So we've now taken this out. So this gives us a strong level to be able to trade from. in my opinion. So for something like this, you could put a potential order on something like this at this level, not even an order, but you could watch like for a market order, and just as it's kind of retracing back down, you could potentially take a position. So let's just zoom out to the 1 minute for just 2 seconds and just kind of see where we're at. Okay. Is an equal high below there? Equal high below there. Where do you see equal highs or equal lows? Yeah, there's equal lows.
Yeah, exactly.
Yep. So let's just watch how this plays out so that we can kind of play this out together here. Okay. So we get the move away, right? So at this point, you get like, I mean, equal lows are going to be equal lows. There's times where you can trade them. There's times where you can't. Personally, when there's absolutely no liquidity really resting in these areas because we're so bearish, I'm not really worried about these getting taken. I'm worried about taking this wick probably right here, and then just kind of keeping my stop loss right below it so that I'm not exposed to the equal lows. So like this. So it's structure over the equal. Yeah, of course. Structure is always going to be king, right? It's the same reason for up here. You know, look at this. Same exact thing, right? We had equal highs, but this is where structure controlled the market from, right? And we knew that this was going to happen because we took out this low, right? We failed to produce a new high, right? Failed to produce a new high and then took out the low, creating a strong high. So it's the same thing, just on a lower time frame. So we took out the highs right here. What caused that to break? Well, it's this level right here. So personally, I'm taking this wick. I would probably look at taking very close to the 50% of it, just because it's a little bit of a larger wick. I think that's what I ended up doing, is something like this. And all I did was keep my stop loss 1.2 and took this up into this guy up here. Okay. 0.25% risk. Anytime you see like liquidity sweeps like this, where you know it's a higher time frame sweep and you're expecting to take out the highs after, or whatever it is, are they riskier moves? Of course they are. They still make sense, but it's, you know, what do you want to risk? It is exactly this, because we're getting close to the end of the session, and if we end up coming up into here and actually putting this coming down and then putting this guy in, is there going to be time within our session before 11 o'clock to be able to get into the next trade? So I'm more than okay with taking, you know, like a 0.25% risk on something like this. And that's exactly what I ended up doing. So let's just see what happens. Okay, we tap in, we get a reaction, put in a new high. If you missed the first one, now you can start to see what's going on, right? So ultimately, you know, this supply has now been officially broken. This isn't even supply though. That's where everybody gets confused, is this is no longer supply because this didn't even take out structure, right? So this little level right here did not take out structure down here, which is what it was supposed to do. So a lot of people just see this as an area to trade from, and it's not. All this does is build liquidity and build the picture to go up higher. So if you missed the first one, guess what? Now we got a big wick sitting here, right? That technically took a small bit of liquidity right here. So when the wick is more than 50% of the candle, what do? We take the 50% of it. It says it right in the trading plan. So if you wanted to, you could take something like this. Question, mate. Why are you in longs if 15-minute chalk hasn't happened yet? Well, this is going to be what creates the chalk. So this is kind of like predetermining what's going to happen, right? So think about this. Anytime we see something where you know, we've broken structure to the upside, we've now swept liquidity to the downside. What is the expectation next, right? What is the expectation while we're in higher time frame demand? If we got rid of all the buy side liquidity and now we're breaking bits of structure to the upside on the lower time frames, what do you think is going to happen? It's likely we're going to have that actual higher time frame chalk. So typically, I'm just showing you this so that when we get into week 6, week 7, you're starting to understand how the second chart can be of value, especially when it's, sorry, give me 2 seconds here. Electricity is out in my house and I don't know when my system will shut down. Better, I will shut down. We'll watch the recording. Okay, thanks, BJ. Yeah, so, excuse me. We're pre-anticipating with all the liquidity built up to be able to jump into this, to be able to essentially facilitate this change of character. Because the problem with this is if we have to wait and we're outside of our trade parameters. I mean, again, it's okay if you miss out on the trade, and let's say this comes back down into here, and then we can trade from this and basically run this all as liquidity at equal highs or whatever it might be. We're just predetermining that this is what's going to happen at this level. And this is why you use 0.25% risk on stuff like this. So let's go back down, and I'm just going to show you what it is that I'm talking about here. So we kind of got the, oh, my bad. Let's go to 1 minute. So we're taking this wick. You can see this changing character right here. Just identifying the first chalk on the M1 is an example for future trades. Gotcha. Exactly. And this is only relevant when we're in a higher time frame demand zone like this, and we've just taken liquidity on the opposing direction. And now the only thing that's going to be left is going to be in that new technically pro trend, but in this case, higher time frame, it's counter trend, but it's that change in character. So we're capitalizing on what it's supposed to be and what we're expecting it to happen, or what we're expecting to happen rather. So if we did something like this, we could easily jump into, and I think this is the one I actually took, and then I just gave myself a 1 point or 1.2. Is that what I did? Yeah, 1.2 or 1.4. I can't remember. But anyways, long story short, we'll just do something like this. High risk reward, keep the risk low. Exactly. Don't overexpose yourself by any means. Okay, so something like this. Let me just move this guy. Yeah, we'll go just like this. Okay, come back down, tapped in. And then as soon as we move away, you never have to worry about us coming back down here. Once we tap into this, it's game over, because you got to remember this entire thing. All we've been doing is building this liquidity, building this liquidity, building this liquidity, building this liquidity. And the more we do that, the quicker this is going to run to the upside. So this is like, you know, obviously when you get a funded account, you know, this is thousands and thousands of dollars that happen just so quickly. And this is why I like taking these setups, is because you can wait the whole session, miss out on all these sells, and then all of a sudden in three 1 minute candles, you know, you're up 10 G's. So this is the setup I really like playing, is watching these higher time frame sweeps and then looking for the lower time frame confirmation. So let's just watch how this plays out. We end up coming into the extreme of the move. So let's go up to the 15 now. I'm just going to get rid of one of these. And you can see that technically, what do we have here, right? We've got supply sitting at a structure point, but this is not going to do anything. And the reason it's not going to do anything is because what can it do at this point? We've already taken all the liquidity. There's nothing to trade from down here. There's nothing waiting underneath these lows, right? There's nothing to push price lower until we put in equal lows and trade from it a few times, and then it creates the liquidity that's needed to be able to give these higher time frame bearish moves into weekly lows and stuff like that. So let's just keep playing price here. We'll go to the 1 minute and watch it come back. We're expecting to see a reaction at the structure high. Okay. This is where you should be partialing. I would say, yeah, 25, maybe 50% of the position at the technical supply levels. However, with the liquidity resting above, you can just take the rest of your profits off the table at the top. Respecting 1 minute demand, tap in, and away we go. Right. So now you got to remember what's going on. So we that's a 1 to 19, you know, on paper, obviously with partials and stuff like that. But these are like my favorite moves to be taking as of lately, is just watching these sweeps. I think you guys saw me catch one. I think it was last week. Same thing on the news. Big sweep, 5 second chalk and flip. And that was it, man. It just rips, right? As soon as you get rid of all that opposing direction liquidity, there's nowhere else to go, right? There's nothing. We got to get rid of the rest of the buyers in this case. So take this order off. And now we're in our higher time frame supply, right? That wick. So same thing. If we jump down to like the 15 second, guess what we're expecting to happen? Same thing, right? So we start to push down. Okay. We've already taken everybody. Okay. Tap into demand. Wait for the pullback. I don't know if it ends up happening or not. Ideally, what I would like to see with something like this is have everything kind of swing back up into this region and then take a limit off of this and then come into the newfound demand. Hopefully that's not too confusing. Again, don't get too lost in the seconds chart. This was all available on the 1 minute chart too, if you knew how to look for it, right? So we essentially broke structure right here, and then we just took the 1 minute wick is all we did. But I just wanted to show you the details on the 15-second to just kind of get the hamster wheel turning a little wee bit. We're not looking to trade from these areas. We only trade from the extremes. So if you look at, let me just clear all of my drawings now, and let's just go look at the 15-minute. You can see how clear it's now becoming, right? We've now had sweep with a boss. What's a sweep and a boss? Right? What is this now? Anybody? It's a chalk, right? So now if we have a chalk, now you can see that we have a strong low to trade from, right? Or a potential strong low to trade from. So let's go like this. Let's go sweep, 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 sweep the bottom, changing character on the 15-minute. So this is now the ideal setup to be able to now look for, again, that same setup that we just saw in the 15-minute, but we're going to want to see this in this demand zone. So let's, I'm actually going to take price or this stuff off, and we're going to see if it ended up happening. But look at, now we've come into the demand zone. Okay, this is most recent price. So now we're in the demand zone, and it's the same thing. We're now, let's go down to the 1 minute and see what ended up happening here. Okay, so the lowest point got taken right here. So this is the strong low right here, right? This was that changing character from the 15-minute demand. Okay, so I would probably have this refined down to the wick. There we go. And it's pretty simple. You can take that all day long, right? Move over to break even. What are we doing now? We're generating liquidity right here. Tapped in, push down. We're going to tap in. We're probably going to push down. This is a great level to trade from. Same thing. Now we have it all built. We have the whole story built. We'll take out the high, right? Strong low, weak high. Over and over and over again. But it's these little details, right? You can't get in too early. You got to let these things build the liquidity. If you don't have the story correct, you're going to be sitting here watching this range, shitting your pants, because we don't have the story built. And in order for us to have the story built, we need to build all of this, right? If we have all this buy side liquidity sitting above here, it's a lot easier to get into these positions. We could easily come back down now and sweep this entire thing one more time, but you're allowed to get into these positions, just move them to break even relatively quickly. Or the better way to do it is sit here in stealth mode, almost like a fucking hunter, and wait for all of this liquidity to get built. Wait for that last little bit of a sweep, and then you basically enter when there's nothing left in the market on the sell side, liquidity side. Does that make sense? I kind of maybe got lost in my words a little bit there, but I hope that's piecing together for you guys. Cool. If it doesn't, for whatever reason, again, man, you know, talk to me anytime. Shoot me a message. I'm usually pretty good for getting back the same day. There's times where, you know, stuff's come up and I'm a little bit busy. It is what it is, but I will get back to you every single time. So don't be shy. Show me your trades, show the group the trades, all that fun stuff. So that's it for today's price action. The last little portion of this lesson, I'm going to just kind of go over magic keys since we got some time. Before I jump over to that, do we have any questions about the lesson for today? Yes. All right, Hugo. Cool. Hugo, go ahead.
Okay, cool. Hey, can you go to the 5 minute? This is just kind of me still trying to piece everything together with like weak versus strong, and you know, the sweep into a POI and stuff like that. But and definitely correct me if I'm wrong. When we were like here, which was pretty much the beginning of the session, I also had kind of that bias that, you know, this was a demand.
Right.
And although it never ended up making a new high, but then I guess I was thinking like, oh, we didn't make a new high because we're just
building liquidity.
More liquidity.
Yep.
And then once price was like around here, I'm like, okay, perfect. Like maybe we'll sweep this into here to then go.
Yeah. Well,
and that's kind of how.
It's
Yeah.
okay to do that, man. I was in the same boat. I was expecting to come down into this region and seeing that change in character, right? So again, because we're leaving from supply, right? You gotta remember, because we're leaving from supply. If you read that trading plan, if we're
Mhm.
leaving from supply, we can't take demand trades unless there's a chalk, right?
Yeah, yeah, and I mean, because there was a 1 minute chalk, but then like obviously following price going down. Um,
Let's go like
so
this,
like, yeah,
demand, and I'll go over to the 1 minute.
okay, yeah, um, yeah. Once price tapped into it, and then it kind of, where was it? Yeah, it kind of like broke this supply and this. I thought like,
Gotcha,
okay, now we've just
gotcha,
swept all this.
gotcha.
Maybe somewhere in this area, I could execute once it comes back down. But
I gotcha. I mean, dude, you know
yeah,
what? It's you're never going to win every trade, right? I mean, the lesson
uh-huh.
to be learned here is obviously, we were in bearish order flow. We're leaving from higher time frame supply, right? And when you start to
Mhm.
see the higher time frame with all the liquidity that was built, um, what should have been at least at some point throughout the session, what should have been realized was, with all the liquidity resting below these equal lows, more than likely what's going to happen is that's going to have to get taken before we can change character, which would solidify that higher time frame changing character
Yeah.
once we take the lows, right? So man, I get you. I get you 100%. You heard me talk about it this morning, right? Like, this is exactly what I was looking for as well. And
Hmm.
very quickly I realized that, okay, well, if we're leaving from supply, and we've already put in a low right here from this area right here, the expectation is to do what? It's to put in a new one, right?
Yeah.
So
Yeah.
it's just one of those things, man, where you got to be able to zoom out. And as soon as you're able to zoom out and start to realize what's going on, from that higher time frame, even just from the 15-minute, you realize really quickly that, okay, we're expecting to put in a new low to take out the last bit of sell side liquidity, right? So once
Right.
that
Right.
happens, then I was like, this is why I got positioned to get into this trade, was because I was like, you know what? I see what's going on here. We're building this liquidity. We're getting people trapped. This is going to clear all this. And then I'm able to look for these lower time frame changes in character to be able to take this into the weak highs, right? And they're only weak highs
Hmm.
because of the amount of liquidity that's there. It's not because they're weak from a structure standpoint. It's because the amount of liquidity that's resting above them.
Right. Right. And like, kind of at what point do you change your bias as far as like something being strong or weak? Like, if you kind of zoom out this chart,
Okay,
um,
5 minute.
yeah, and at that point, I know I get that, like, right here was our strong high, right?
Yep.
And this was weak. Once it starts coming back down like this, you think that this is still weak, but then like once you start getting a chalk here, now it's like, actually this is weak.
And
You,
this
you
is
know?
where higher time frame is just going to kind of prevail, because you got to understand that if this high right here was strong, right? If this high right here was strong because we broke structure here, you got to remember what the
Uh-huh.
expectation for the market is,
Uh-huh.
right? We can't force trades here. But that, and this is partially my fault. And the reason it's my fault is because this is what I was looking for. And I kind
Yeah.
of told you guys that too, but I didn't see anything that really, really showed me enough to be like, yeah, no, I'm going to jump into a long. Like, I very quickly realized that, okay, we're reacting to higher time frame supply that put us into a new low. The expectation now is to put in a new low, and if we're going to put in a new low at this level right here, what is that really close to? It's close to all this stuff, right? So then I was like, okay, well, if that's the case, it's pretty simple. We're probably going to see all this liquidity get cleared, and then shortly after, we're going to be able to blast through and take out all of this, because that's all that's going to be left in the market. So there's, man, I almost took, well, I was so close to taking trades in here. But I ended up looking at the 15 and I was like, you know what? Like, we didn't take out the high. This is not a strong low to trade from.
Yeah.
So
No, thank you.
cool. Does that make sense?
Yeah, that makes sense.
Cool, man. Thanks.
Yeah.
Zen, you're next, buddy.
Hi.
Hey, Zen.
So I have a question at the entry. Can you go to the 1 minute chart?
1 minute. Yeah.
So
I'm just gonna move it. Just give me 1 second. Right here.
can you squeeze the chart vertically a bit more so I can see the higher area?
Yeah, 1 sec.
Okay, yeah.
There we go.
So I've been taking notes on the way in the whole class. So one
Yep.
of my points, right, says that we shouldn't trade if the POI is formed by equal highs, right? So for example, this is equal high, and
Yep.
this POI is invalid because
That's right.
it's equal. So same goes to here. So this is invalid.
That's right.
Right. So for over here is also equal high. So I just couldn't accept this point.
I got you. I got you. So again, these are, like I said, this is a little bit of a riskier play. I'm not saying go out and do this every single time, but the reason these are not something I'm really concerned about is because all the liquidity for all of this has already all been taken. There's not many people that are going to be trading from these lows. All the market is doing right now is establishing itself to be able to create more liquidity to be able to facilitate this larger move, right? So these are these little details, like you wouldn't necessarily trade from the equal lows, but something like this wick, where like you're not really exposed to the equal lows. You're just above it, right? But I get what you're saying, man. This is one of these things where when there's this higher time frame grab of liquidity, the only place I'm expecting this to go is upwards. Well, I'm not expecting to get swept out again because we've already done that.
Okay, so can I say that is if a higher time frame takes liquidity, then
Yeah.
this rule is one exceptional to the situation?
Yes, you can say that. Again, every single scenario that presents itself when it sweeps is going to be a little bit differently. But in this circumstance, I was comfortable doing it based on the fact that we had all of this liquidity already built up here. And to me, because we've taken all of this is already going to be because all of this sell side liquidity is taken, the only thing I'm expecting to happen is buy side liquidity get taken far before these equal lows get taken, if that makes sense.
Okay, thanks.
Cool, man. Thanks. Sorry if that maybe I'm having a hard time explaining that, but if I can just kind of reword it here, there's a higher probability of us taking all of this stuff because we've already taken the opposing direction. I am not worried about these small little equal lows getting taken based on the fact that higher time frame intention is to clear out the liquidity in the opposing direction. I think that's a better way to kind of, so the likelihood of us taking this before we take this, we're more than likely to take this stuff first. And that's why I was able to trade. Okay. How to know it's going to range and stay away like the last 10-15 minutes on the 1 minute? Well, let's go have a look at this. So we need to have the narrative, right? We got to have the narrative built. So when ranges are good, especially after a chalk. Ultimately, what we got to see here is technically we've taken out little demand levels in here. So ultimately, what I would expect to see happen is probably something tap into here and then pull back to take out some of this, and then we'll trade from an area like this. So being the first one there is not necessarily a good thing unless we've already taken a bunch of liquidity from the market. Then you'll want to get in first. But in circumstances like this, we're playing the process of mitigation, right? So as things get mitigated, as things get, tap in, fail to produce lows, tap in, this is kind of your sweep area is in here, right? Because we've now induced this low down here. We've induced this low down here. These are the strong areas in which you should be trading from because they've already taken that liquidity from these guys. So for me, when we see these changes of character and we see this kind of wonky, rangy price action, what I typically like to see is that buildup of the opposing direction liquidity before jumping into something. We need to have a reason for price to want to travel in that direction. And this is only going to happen when people trade kind of in this rangy area. It's kind of squeezing price. Remember bear flags, bull flags, all that kind of shit. But ultimately, the reason why we have these massive breakouts is because there's that buildup of liquidity, right? The more equal highs we build, the more equal lows. Ultimately, now what you want to see is you want to see a sweep of whatever this liquidity is before then taking it to the upside. So if I was going to trade this right now with equal highs and equal lows, if I didn't take a position already, we've got equal highs and we've got equal lows. I think what I would like to see is more than likely one last drive into this guy down here, and then I'd be looking for like a 15-second flip. Does that make sense? Because what this is going to allow us is like, this is not structure, right? Structure sits here. Structure sits here, right? This is all substructure. So ideally, what we want to do is induce people into thinking that this is now going to essentially go in this direction. People are going to be trading from this high up here, but the problem is all we've done is build liquidity and then take the liquidity in the opposing direction to then put in a new high. Does that hopefully that makes sense. Following up, got it. So stay away from, yeah, exactly. That's, I mean, the name of the game, that's the name of smart money, right? Is essentially wait for a sweep, right? And this is where patience comes in, right? And a lot of times this will start moving away and you'll get FOMO'd in and take a mitigation or something like that. But ultimately, you got to remember that if we come up now and tap into the extreme and then we pull back and then we change character like this is where I'd be looking to trade from, building that equal high liquidity to put in a new high. There's no telling what's going to happen here, right? It's just about reacting to what the market is going to give. I guess my most ideal setup here would be to, like, obviously we haven't taken this high, right? So if we haven't taken this high, what does that mean? It means that this low, in theory, should be weak, right? So if that's the case, and we take the low like this, we know that this low is strong because it took the high over here. If we see a sweep with a 15-second flip, then we can take this because now all that's left is here because we've just taken out all of these guys. Fucking talking around in circles here. I hope this is not confusing more than it is helpful, but that's ultimately my ideal setup, is to wait for opposing direction, which would be this side over here. So likely what's going to happen here is we'll come up, we'll probably come back down, see a reaction here, come back down, print equal lows, very similar to what we did here, right? Just keep printing equal lows until we fall through that last bit and then push in the opposing direction, right? All the orders are built up here and here. Where are we going to go first? Usually we're going to take out these guys before we could take out these guys. So we're pretty well, I hate to do this, guys. I've got some stuff I've got to do around 1:15. So what I'm going to do for the magic keys is I'm going to record a video tonight, just specifically for it, going through how to change the parameters and stuff like that. I've already sent out the file to most of you. What I'm going to end up doing is pinning the file to the top of the Telegram chat, and I'll also pin it or tag it rather in the unlisted YouTube video, a direct download for it. I'm going to create 100K risking 1%, 100K risking 0.5%, 100K risking 0.25%. I'll do a 200K for the same thing, full, half, and quarter, and I'll do a 50 for the same thing. So I'll have all of the different files labeled. I'll do that this evening, and I'll put that in the comment section of the YouTube for you guys. And then that way you can have them all downloaded, and you'll just be able to very quickly load pretty seamlessly on your chart. I think that's the better way to kind of go about this. And then from there, what I'll do is, so when you, I'll do an entire breakdown of how everything works, how to get your stop loss to break even, all that kind of stuff. If I remember correct, you used I used 0.4. Do you want, I can put that one in. It's very easy to change all these things. I'm going to show you how to do all that in the video, but I think 0.25%, 0.5%, and full percent are like the kind of like the standard. What I would suggest doing if you do a 100K account is probably start your first two trades with 0.25%. That way, if you lose 2 trades in a row for whatever reason, you've only actually lost 0.5% of the account. And basically you want to take a 0.25% risk up until maybe you have 1% or 2% built up in the account, in which then you can bump up to maybe a 0.5%, right? Get your confidence up and then be able to risk a little bit more. It's not a sprint, right? And I think that's where a lot of people, they're like, if I risk 1%, all I need to do is hit a 1 to 10. And that's not the way to go about a funding challenge. It really, really can fuck you up psychologically, puts a lot of added pressure on yourself for nothing. So I would suggest even just a 1/4%, get 2 or 3 wins under your belt, and then just bump up to a 0.5%, and then just run the rest of it with a 0.5% throughout the entire thing. Absolutely no reason for unnecessary risk when it comes to the funding challenges. You're going to see really quickly they're stressful enough as it is. No need to put yourself in a position where you're more stressed out than you need to be. So yeah, guys, sorry. I wish I could do it today and just go through this thing, but it's about a half an hour to really go through it properly. So what I'll do is I'll just record a video. If it's not tonight, it'll be early tomorrow morning sometime, and it'll be uploaded in the playlist. Everybody able to access the playlist, by the way? No issues with like watching videos and stuff like that? Okay, cool. I'm going to add a few more videos too from the November masterclass, just ones that are relevant, some of the better ones. So I'll select those again over the course of hopefully this weekend. We're doing a little bit of Christmas decorating and stuff today, so I don't know exactly what time that'll be at, but I'll get some more stuff in there for you guys so that you just have a little bit more homework, a little bit more context, depending on how much you want to study and stuff like that. Don't forget, man, take a day off, whether it be Friday, whether it be Saturday, Sunday, whatever it might be, take a day off the charts. You need to do it. It's so essential to be able to just kind of cleanse yourself a little bit from all of the noise the market provides. So just make sure you're doing that. Don't put yourself in a position where you're overworked. You're just going to grow to resent trading as a whole. So make sure that you're taking at least a little bit of time for yourself. But yeah, that's it for today, guys. So tomorrow will be a new piece of price action. Everything will be uploaded. I'll try to get this one up right now, and it'll be in the playlist for you guys, hopefully in the next like 2 hours or so once it's done rendering. So have a good rest of your weekend. Enjoy it, and we'll catch you guys early next week, Monday on the charts. See you guys.